Australia's economy is built on this: coal. It began exporting the commodity more than 200 years ago, shortly after British settlement began. Coal-fired power plants supply about 3/4 of the country's electricity, and coal exports to Asia have fueled a decade-long boom that has made Australia one of the richest countries in the world. But the industry is in crisis, and not just in Australia. Global prices for thermal coal have halved since 2011 due to a supply glut and slowing demand in China.
Currently, it's estimated that over half of Australian thermal coal producers would not be making an accounting profit, and probably a quarter would not be making a cash profit.
China is coal, coal is China. China is half the world's coal production, half the world's coal consumption. Last year it was the #1 consumer of imported coal in the world, and last year China reduced its coal imports by 11%. This year, the rate of decline has accelerated exponentially.
All over the world, coal faces competition as cleaner alternatives get cheaper. Wind and solar power are gradually becoming more viable. Gas prices have tumbled because of US shale reserves, and what's more, regulators are cracking down on carbon dioxide emissions.
I think the seaborne thermal coal market is in structural decline. I think it's entered into the decline in the last 12-18 months, and with every month the data is getting stronger and stronger.
As world leaders prepare to meet in Paris later this year to hammer out a deal to combat climate change, the G7 group of leading economies says it wants fossil fuels phased out by the end of the century. The Pope says destroying the natural world is a sin, and even some of Europe's gas and oil producers are calling for a price on carbon.
The oil and gas industry is effectively throwing coal under the bus as the weakest member of their herd.
But Big Coal says rumours of its decline are exaggerated.
Oh, certainly in a major cyclical downturn. For it to be structural, you'd have to be talking about reducing demand in the traded market, and certainly there is not reduced demand in the traded market. All you have to do is look at the official forecasts from groups like the International Energy Agency.
Australian Prime Minister Tony Abbott is a staunch supporter of the industry. His government is backing Indian companies Adani and GVK, who plan to invest tens of billions of dollars to ship 100 million tonnes of coal a year to India through this port at Abbot Point. The coal would come from one of the largest untapped coal fields in the world, Queensland's Galilee Basin.
India is very important. I mean, it already imports over 150 million tonnes of coal, so it's a very close second in importance to China at the moment, which imports about 200 million tonnes. And over the next few years, it will overtake China as the primary importer of thermal coal.
The coal export industry is pinning its hopes on India, where less than 1/3 of the population are connected to the grid, and manufacturers have to rely on backup generators to ensure a consistent power supply. However, forecasts of Indian demand for coal are fraught with uncertainty. Narendra Modi, India's Prime Minister, is determined to fuel the country's economic growth with domestic coal. He wants to curb all coal imports within 3 years.
They will be increasingly dependent upon the domestic coal. I am not saying that in 1 year or 2 years only the entire import can be eliminated, but the cost-effective solution within the country, make the coal which is available in the country, is the priority.
If the government and Coal India succeed, it could be fatal for Adani's proposed $16 billion investment in Queensland and the entire development of the Galilee Basin. More broadly, it would also raise a question mark over the viability of the seaborne coal export market.
You need to have a first mover in a new basin. Once the rail line and the port and mine and a lot of the associated services that go with those operations are up and running, it makes it much easier.
Wood Mackenzie remained confident that Adani can raise the funds to build the mine, but opposition to the development from environmentalists concerned about climate change is intense. Andy Pittman, climatologist at the University of New South Wales, says the science is incontrovertible. Developing the Galilee Basin would make it impossible to meet the UN's goal of restricting global warming to a level of 2 degrees above the pre-industrial age average.
With the Galilee Basin, if we burned the coal that's supposed to be commercialised as a result of that development, it would represent about 80% of the maximum allowable emissions that humans have got left to avoid 2 degrees.
The battle for the Galilee is now the focal point for the global divestment movement, which aims to persuade financial institutions to sell investments in coal. So far, 11 international banks, including Deutsche Bank and HSBC, have pledged not to fund Adani's project. If world leaders agree on tougher emissions regulations in Paris, financing new coal mines will become even more difficult.
I think it's unlikely that the developed world is going to say to the developing world, you can't have access to cheap energy.
The coal industry wants governments to support investment in clean coal technologies.
Application of the best available conventional electricity generation technologies, such as supercritical technologies, plus the continued rollout of carbon capture and storage technologies is the way of the future for coal.
But so far the success of carbon capture and storage is limited. Just one large-scale power station is operating in Canada. The Boundary Dam plant aims to cut emissions by 90% by trapping carbon dioxide underground before the gas reaches the atmosphere. Former BP executive turned environmentalist Ian Dunlop says the technology is expensive and cannot possibly be deployed in time.
Carbon capture and storage, clean coal technologies, so on. I mean, that's been the mantra for the last 20 years, and it hasn't worked. The industry itself has not been prepared to put the money in to make it work. It's proved to be much more costly and technically more difficult. And we're now at the point where we have very little time. I mean, if you want to sequester 20% of the world's carbon emissions, you're going to have to build an industry in carbon capture and storage that's probably 70% bigger than the current world oil industry. And you're going to have to do that in probably 10 or 15 years if you want to stay below that target. Now, it isn't going to happen.
The success or failure of the Galilee Basin mines and the port expansion here at Abbot Point will be an important signal for the future of the thermal coal industry. At current prices, the economics look challenging, and emissions regulations will only get tougher. But Asia's thirst for energy makes it difficult to phase out such a cheap and plentiful fuel. Jamie Smyth, Financial Times, at Abbot Point.